Here in the United States, we moved up 4 or 5 points on the S&P. Just take a look at Germany here. And the key mover, of course, wasn't the fact that they're ending the asset purchases. It was the fact that their rates were unchanged until last summer. You see that pop up right there into positive territory. That was the 745 announcement. Here in the United States, sectors, well, we're still considering getting that consumer discretionary okay. Tech's up a little bit. We need a little more help from energy. Healthcare was great yesterday on the M&A news, and banks are just a problem. They have stopped being a leadership group for the last couple of weeks, essentially. We have a week with a lot of news. What we don't have is a lot of movement in the stock market here. So positives, we have media M&A, we have no ECB rate hike, strong retail sales, and we have some risks out there. The China economy, China tariffs are an issue. The president may impose them tomorrow, and a somewhat more hawkish Fed. I wasn't as hawkish as some people were after the presser yesterday, but you could argue they're somewhat more hawkish overall. What we don't have is a lot of movement in the market. So the S&P is basically flat this week. We're only up because consumer discretion, because the retailers and the media stocks have been really strong this week. We're modestly up on tech as some of the semiconductors have moved back. But banks, that was a big mover in the last couple of weeks, and energy stocks have essentially stopped helping the market out, and that's kind of why we're just flat right now. It's not that there's nothing going on. We do get some new highs. There's some big names that are out there. Amazon, Twitter, Netflix, Salesforce. They're all sitting at 52-week highs. Those are big high-profile names. It's just that there's not a lot of overall market volatility that we're seeing. Steve mentioned the retail sales numbers, and boy, they were terrific. I watched these numbers pretty carefully, and I don't normally look at month-over-month numbers, but look at these are month-over-month numbers. Building materials up 2%, gas stations, clothing, my favorite category, restaurants and bars up 1.3. That's a lot month over month. And look at the department stores. All of that commentary, earnings numbers showed up in the retail sales, up 1.5%. You don't see that kind of number very much. And as a result, we have seen stocks move on this. The market's paid attention to those earnings commentary from the retailers, and all the department stores are doing darn well so far in June. And remember, this is only halfway through the month. Right now, we're just off the highs, Carl, up 70 points in the Dow.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.